All righty, thank you. Let me begin by saying it's been almost 2 decades now, so I guess we've got to fix the biography a little bit. But what I'm going to show you today are my favorite first-hour trading tactics. So really, right now, if we want to be done, we're done for the day. We do a little room with a bunch of traders and get in there and run these very same tactics that I'm going to teach you today. I'm going to show you exactly what it is that we do. One of the things is a little bit technical. It's got a little bit of statistics in it, but other than that, these are all pretty just nuts and bolts kind of trades that you ought to be able to, just bang out starting tomorrow. All right, I saw someone say the volume was a little bit low, so I just picked it up just a little bit more here. Hopefully that's going to be good enough. I don't want to blow anybody out of the water either. But let me tell you a little bit about us. So that's my wife, Julie. Julie and I met in graduate school. We started trading back in 1998, and by the time we graduated from our doctoral programs, that's what we decided we were going to do for a living, and that is, in fact, all that we've ever done. Now we've added sort of an education component via Trader Insight and also some fund work that we do, but the gist of it, the thing that we do every single day is still what we did in the late 1990s. We developed our strategy. We developed it in grad school. Been working it ever since, and I think you're really going to like these first-hour trades because these things are very much just very mechanical and easy to pull off. And if you do them right, then you pretty much can walk away from your computer after that first hour is over and be happy with the result. And then if I have time, I'm going to show you the actual first hour trades that we had today that relate to these strategies that we're talking about. And I think you'll be pretty impressed with that as well. We had a good day in the room today. So first one we're going to talk about is opening gap reversals. I know everybody loves an opening gap, right? So problem is people don't know whether to fade them or follow them, or are they gap and goes, are they reversals? So what I've done, and this goes all the way back to grad school, right, where I was developing statistical models, and this one has not changed one bit since then. It's a very simple statistical model, and it uses true range as a proxy for volatility. So if you don't know what true range is, let me just give you a real quick education here about it. I'm sure everybody does, but just in case there's somebody in the room who doesn't know the difference between range and true range, today's range is really a simple concept, right? It's just the high minus the low. So if we had a high price today up here, and we had a low price down here, right? And those values were $50.10 at the high versus $49.40 at the low, then the range for the day was 70 cents. True range factors in something else, right? So here we've got the high, and then we've got the close of the previous day. And the reason we're interested in true range is we're looking at gaps. And whenever you're doing a statistic on something, whenever you're studying something, the best way to approach it is to look at the thing you're actually interested in. So for a long time, we tried to figure out how to do opening gaps with volatility measures, either using the VIX or the implied volatility of a front month contract on a stock, or there's any number of things that you can do. But since you're actually interested in an opening gap, the best statistic to compute is the statistic around the opening gap, right? So that's why we're using true range as a proxy for volatility. Okay, so let me just back up here. That slide's going to jump on us, but basically what true range is going to do is it's going to factor this gap into the range, and we're interested in that data then. So we're going to count this as the range for the session, the close of the previous session to the current session, and then we've got the high minus the previous day's close. That's going to give us the true range for the stock for the day. So here is an assumption list that we need for this model to work. First off, we've got a normal distribution because we're going to do a statistical procedure, and statistics always rely on you've got a normal distribution. And your software will handle this for you. So if you're using just about any, if you're using TradeStation or if you're using Metastock or Realtic or well, just about anybody is going to be able to e-signal. Anything that has a programmable interface is going to be able to handle all of this for you. You got a normal distribution. You're assuming true range is your proxy for volatility. And you're assuming volatility is mean reverting. I've done a bunch of studies over the years. I've written a bunch of stuff about this. Did some articles for some of the popular magazines, Active Trader, that kind of stuff, and showed that volatility is in fact mean reverting. What that gives you is access to this thing, right? The standard normal distribution. And if you go out one standard deviation on this, that gives you 68.2% of the volatility you expect. So 68.2% of what you're going to expect to see is covered in that red area there. And if you go out another standard deviation into those two purple tails, that gets you out to where 95% of what you expect is going to happen has already happened. And when you have a gap opening, right, that doesn't say you have a 95% probability of making money. What it says is you've got a 95% probability that that gap is going to revert towards that mean. It's going to fade back in before it goes and does something else. Here's what mean reversion says. If you have a distribution that looks like this, the mean runs right through the center of it, right? That's the average. It's just the arithmetic average of your data. So that's your true range data. You've got that number running right through the center of it. Then you have these periods of high volatility, which are these red balloons, and you have periods where it's reverting back towards that mean. Those are those blue balloons. Those are where we're looking to profit. So that's where we're thinking we're going to have the opportunity to fade back into the gap and profit from the reversal move. So the formula inputs for this are really simple. I mean, if you need these for your software, then you can go ahead and just pop me an email. Everybody's got my email, and I'm happy to help you figure out how to load these things into your trading software. But if you've got TradeStation or you got pretty much anything that has the capability to plot Bollinger Bands, can do standard deviations. That's all those are, standard deviations of closing price, and you're just going to change that formula to be standard deviations of true range. But we see that if you take a sample calculation, right, all you're doing is taking the true range for 10 days. So we're interested in a 10-period look back, 2 weeks of trading. And what we're going to do is pop those into that formula, right? So the formula is going to take each one of the days' true range, and it's going to put it right there. So x1 through 10 minus the average. Then we're going to square it to get rid of a negative number. Divide it by the total count, which is 10. That gives us one standard deviation. We're interested in 2 standard deviations. That just means you multiply that 0.49 by 2, and you add it. So you're going to add it to your average. And then if you have a gap of that magnitude, that is going to tell you that you've got a gap that you're interested in fading. And I'm going to show you some examples of those. And then, like I said, I can even show you the example from BBBY, Bed Bath & Beyond today in the trading room, of course, was the only one that gave us an entry, and it followed through exactly the way that the examples I'm going to show you followed through. So what you're looking for is the bulls and the bears, they go, the gap of stock open. It's either 2 standard deviations up or 2 standard deviations down of that volatility measure that we're using. And we're going to look to get in just above the high or below the low of the deepest bar in the gap. So essentially the way that I handle a gap is it's like a big pullback. So here's 5-minute bars, right? The ones on the left would be yesterday's closing range. This is the gap into this morning. It's down 2 standard deviations, and then I'm just going to look for the deepest bar in that gap, right? The deepest excursion that we made. So I'm just looking for those highs to keep drifting lower. And when I get to the lowest low on a 5-minute bars, and I only do this for the first half hour of trading. So after the first half hour, I'm done with these. I'm going to look to get long in this case right above the high of that 5-minute bar, that deep 5-minute bar. And that's exactly what we did this morning with Bed Bath & Beyond. And then I'm going to target the open. So I'm going to target the open of that first 5-minute bar, or there's a couple other ways of targeting that I'm going to show you. But this is the most basic, and this is the easiest way to go through and do these. So essentially, here's a stock that makes a gap, right? And this is the one from the example that we had from that data. There's your gap open. That's on a daily chart. One standard deviation was 49 cents. Two standard deviations is 98 cents. The average was 125. So you just tell your software, add 2 standard deviations to that average. And voila, right? $2.23 is what it has to gap. And how do you find the stocks that gap? I've got TradeStation looking for them. I've got Metastock looking for them. I've got RealTicker looking for them. So we've got a bunch of different software apps that we've gone and programmed out that go and plot these. And yeah, you know, if you're looking to use some other measure to plot the 2 standard deviations, pretty much anything that will give you 2 standard deviations of the volatility you're interested in, boom, you've got a valid measure. You just have to test a little bit, and if you're going to do variations on this, I encourage you to do variations on this. You just need to make sure that you see that really what you're looking at is 2 standard deviations of the volatility that you're interested in. And then you just, you know, like I said, you just go through, and in this case, the gap's $2.84, so we know we've got enough for a gap fade. And then in the morning, right, in this case, the deepest bar in the pullback is which bar? It's that first 5-minute bar, right? First 5-minute bar is the deepest bar that it had. And when that happens, it makes it harder to target something. Like I'm going to show you a couple of targets that I use, pivot lines, fib expansions, all that kind of stuff. But one of the easiest things to do is say, I'm going to get short just below the low of this bar. And then when I get a reversal of 2 closing prices, I'm going to exit the position. So you're short, and then that second bar on the chart, that second 5-minute bar, closes sort of up in the range. Third 5-minute bar closes down in the range. The fourth 5-minute bar reverses the close of bar number 3 and reverses the close of bar number 2. All I mean by reverses is it goes and trades back up through those closes. I mean, essentially, some of this goes back to you have to have some sort of a criteria to exit a trade, and that's as good as any, you know, for these reversals. Because what tends to happen is they'll reverse, they come back down into where there may be 1 standard deviation of the mean, or they'll come down and close that gap completely, and by the end of the day, they've gone back up in the direction of the gap and gone even further. So you don't want to hang on to these for you know, for a big multi-day move or something. You're just looking at these as, did it reverse? Did it come back in? And, you know, once it gives you a signal that it's, you know, that the move might be over, you're going to get out of that trade. So here's one I'm going to show you too what the scan criteria looked like, right? But here is one in TripAdvisor, 2 standard deviation opening gap. And right, this is a zoom on that chart. The deepest bar is the second bar. You're just looking to get long, in this case, right above the high of that second bar. And what are you going to target? You're going to target that open of the first bar. And if you look at the chart, right, it's almost like magic. And like I said, if you pull up BBBY from today, you're going to see this happening, you know, just an hour or two after the fact. You'll see exactly what it looked like. And those of you who are in there from the trading room, you know, you can help me out and tell these guys, you know, that was the only one that triggered today. These are very, very reliable, so we didn't cherry pick that. This is the entry on the long, is above the deepest bar in that pullback. This was where the target was, right at the open of that first bar. Stop loss would be down, you know, just in below the open of the bar that got us in. I mean, you're going to have to pick something as a stop loss, and you just have to look at a place that price did something. So what I tend to do is opens, closes, highs, lows. Sometimes I'll plot a short-term volume-weighted average price. I'll do something to find a very logical place to put a stop. And if I don't have one, then I just won't take the trade. But in this case, again, right, straight to the profit target, and then it reversed and came back in again. Now, the way I set these orders up is that I don't want to be fighting with, you know, fumbling around with the mouse and trying to find a way to get in or out. I set them up as bracket orders. I have these things, a strategy that I have already set up called opening gap. This is in RealTick. I use RealTick as the software that I use to trade. And really what I'm doing is I'm doing a stop limit order. So I'm doing a marketable limit order. I don't do market orders ever, never a straight market order. And in this case, we know that the high of the second bar was 72.40. That's my stop price. So as soon as it hits 72.40, I'm going to have an order go live with a limit of 72.43. So 72.43 is the worst slip I'm willing to take. If you have to take more than a 2 or 3 cent slip on these, don't do them, because you're going to wind up skating in the wrong direction. You really don't want to do that. I'm going to close my long at $73.69. Again, that's from the open of the first bar of trading. That's my target. And I've got a stop loss in place. 72.09. I had a hard time looking in there to see what that was. So I can see what my potential profit is, what my potential loss is. My risk to reward ratio is in good shape, right? Pop the order in. Some people like to take some of this off on some of these trades off on 50% moves to the target. So in that case, what you do is you set the order up almost the exact same way. You've got a stop limit order, and this time you've got your stop losses at exactly the same place, but you have 50% of your order going off at 72.99 then, and 50% of the order going off at 73.69. So you're talking about, micro moves and, beating fees and commissions. Yeah, I mean, I do large order size. The guys in the room on the typical opening gap strategy like this, they'll do anywhere from 200 shares, 500 shares, or 1,000 shares, depending on how long they've been with us. I mean, the boot camp guys, obviously, if you've been to a boot camp, you're serious about doing this. Those guys are usually trading 1,000 share minimum on these moves. These are all big stocks. There's no problem getting fills. And then it is very important that you're going with a broker who gives you good commissions, and also that you're in the position to get rebate trades and all that kind of stuff. So most of the trades I do, just so you know, I'm getting a rebate on the liquidity that I'm providing. I'm making sure that I'm not chasing the market. When you chase the market, you wind up paying rather than being paid to trade. That's a whole other topic. But yeah, you can pretty much structure these things so that you're trading almost for free, depending on the size you're trading. And in the end, if your commissions if commissions and fees come into play, then you really need to take a look at the broker you're dealing with and make sure that for scalp trades and that kind of thing, that you're using the right guy. Money management, biggie is like that 50% level that I showed you. That is the portion of the trade where we get to risk-free. Risk-free is the most important thing in any one of these trades for me. So if I get it moved to 50% of the target, right away I'll ratchet up to break even. If I get to the target, I'll either take the whole thing off or I'll trail some of it at 50%. And again, the initial targets for a gap down, we're going to use either the high or the open of the first bar. Initial target for the gap openings up, we're going to use the low or the open of the opening bar. And then we can also use pivot lines, fib ratios, all that kind of stuff. I've got some of these as examples here. I'm going to make sure I don't run short on time. I'm going to get through these a little bit quicker. But here we see, we had an opening gap. This one, we had an aggressive entry right at the close of the first bar. All right, well, where are you going to put your target on this? You can either put it down at the low of the first bar, or you use a fib expansion. So in this case, I just use 382, 0.5, and 618, and then I use 1.382, 1.5, 1.618. I use those as the projections. You can see there, my target on the trade would be the 1.382. The better target, of course, would have been the 1.5, but I like to keep these things a little bit tight because they tend to reverse. Obviously, I left a little bit of money on the table, but that's almost always going to be the case with my style of trading, right? You're never going to squeeze every penny out of every trade. This one, gap lower. Those lines you see there, the red line, the green line, the blue line, the black line, those are floor trader pivots. Just about every piece of software out there is going to plot floor trader pivots for you. The red line is just a central pivot. That is based on yesterday's high plus low plus close divided by 3. That's how simple that is. And guys have been using these for years and years and years. Everybody I know who uses them loves them. You see here what happened. Gapped open, the entries right above the high of the first bar. Now you're scrambling, trying to figure out what's your profit target. Well, you just put your profit target right at that next pivot because the high of the first bar is going to get you above support 2, and your target is going to be support 1. Very, very simple way to place these trades, right? Very organized, gives you a way to plan exactly what you're going to do. I'm very big on planning every single thing you do every single day. Here's another fib, right? You get the move up. You got an entry under that second bar of the day is the deepest bar in the pullback. And then again, you've just got a 382 expansion ratio. You're leaving a lot on the table, but one more time, I don't care, right? I just want the most structured trade that I can put together, and I want to make sure that I'm in and out at a place that I can define ahead of time and pop into those bracket orders. Now, the next one that I'm going to look at is these are setups that we do in the war room every day. Now, this is because this was developed because a lot of guys who come in are coming in, they want to put about $5,000 into an account. A lot of these guys are using some of these offshore brokers who will let you intraday trade with $5,000. That's great, if that's what you want to do. Other guys are just doing 3 trades a week so they don't fall on the wrong side of the PDT rule. But we put this together for guys who want to start small in terms of dollars in their account and then want to be able to trade and make some decent money. So at first what we did was said, we're going to guarantee you that every day you come in and trade these, if you do what we're telling you to do or you do what we're doing, you're going to walk away with at least $100 for your effort, and you're going to do that on 1 or 2 trades. And the way these work is really simple. These are also 2 standard deviation moves that we're looking for around the open, but these are scalps on low dollar stocks. So the sub $10 stocks tend to gap pretty frequently. Now, they don't have as much follow-through as those big cap counterparts do, but they tend, once they've gapped, to move out of the first 5-minute range and give us a pretty predictable thing that we can look for. And that thing is a profit target of 10 cents. So what these guys are doing in the room is they're taking, $3 stocks, $5 stocks, sometimes as much as $10. They've got 1,000 shares of those, and they're looking for a 10-cent target, and the stop loss is going to be 3 cents. We do these every single day, and we send out a summary of what they are every single day. And there are plenty of people in that room who will tell you the summary is dead on accurate as far as which ones we're popping up there. Again, we're not cherry picking anything. We're just reporting exactly what Rick was a boot camp attendee who runs this part of the room. He calls these, and they wind up being just beautiful trades. They're only in the first 60 minutes of the session. So everything we're talking about today, I do for the first 60 minutes of the trading day, and that's it. So 1998, I loved sitting here for 6.5 hours every day trading. That was great when I was 30 years old. At this point, I am 48 years old, and I like being done after the first hour and going and spend some time with my kid. Right, I've got a 7-year-old boy, and I cannot get enough time with him. But here's one from, so this was yesterday or day before yesterday when I put this presentation together. Same thing, right? We've got an opening gap, got that 2SD move. All that tells us in the case of these sub 10s, right? Every statistic you do, you have to go and sort of take a look at what's valid and what's working. And for the sub $10 stocks, you're not looking for a reversal. You're looking for a breach of the first 5 minutes of trading, and you get a very statistically reliable move based on that. And all we're looking to do here is take that first 5-minute bar and bracket it up, right? So we got the high, we got the low. And what we're going to do here is a violation of the top or the bottom of this is going to result in an entry. So those of you who are following us every day with these, you know the drill by now. So when we see it gap, we say, okay, here's a stock that gapped. Here's a stock that's sub 10. We're going to bracket up the first 5 on this. If it moves up above, we've got a profit target of 10 cents. And if it goes against us, we've got to stop out at 3 cents. And really, where the reliability on these comes into place is that 10-cent move is really not hard to get on that breakout, right? You get enough of a move through. These are very liquid. You know, somebody is going to ask the question about, you know, how hard is it to get these? How, you know, do you have to chase them? I'm going to say on average, I've got all the time in the world on every one of these trades for my order to get picked up. So I always provide liquidity when I'm doing these trades. I'm never taking liquidity. So that means I'm always, if I'm buying, I'm posting on the bid, and I'm going to tell you, I get filled almost every single time. So they're slow moving. They're not as fast moving as your big cap stocks are, as like those Baltimore chop setups. You know, those tend to go really fast. But in this case, the slow move is really great for a lot of people, especially when they're first starting out, or they're just getting their chops on this intraday stuff. And it's nice to be able to pull a couple $100 out of the market every day. All right, here's another one. This is the same kind of a thing. Sub $10 Arena Pharmaceuticals. Right, had the 2 standard deviation opening gap. Bracketed it up. You can see where that first bar closed, right? It closed down in the range. So you got plenty of time to put your bracket order together. These don't happen super rapidly. You've got your bracket order set up. The violation of the top of the bar is what's going to wind up getting you into the trade. You got a 10-cent profit target. Look where this thing turned around, right about 12 cents. If you start trying to squeeze more out of these, I'm telling you, you're going to be in trouble. But the 10-cent push is very, very reliable. And the 3-cent stop loss is all the risk you're willing to take on that trade. So that is a great trade if you're trying to put a limited amount of capital to use, or if, you know, let's say, like in my case, I've got a very developed trading plan, right? So I've got a trading plan that involves 10 or 11 stocks every single day, and I'm putting a lot of money to work. Well, I can set aside enough to do a lot of these $5 and $10 stocks, even if I have a big position open in FedEx or something, and I've got a couple $100,000 out on FedEx. It's not that much to say, okay, well, I'm going to leave another $5,000 or $10,000 sitting there, and that's what I'm going to trade those sub 10s with. So it's not just guys who have small accounts who are doing it. You know, it's guys who are trading significant amount of shares in big dollar stocks too, can really profit from that kind of a thing. Now, the last one I want to look at is intraday range scalps, and I'm hoping I can pop these live charts up for you yet. Intraday range scalps is one of my favorite trades. I do these right off the open. A lot of people follow them over the course of the session. Some of you are junkies, and you know, you just want to sit there all day trading. That's great. I remember that. But I like them off the opening bell. And these are based on the fact that areas that constrain trading activity today, very likely going to constrain it again tomorrow. And what you want to focus on is stocks that have very, very clear ranges, clear support and resistance. You want to see swings within those support and resistance areas of about 20 cents. And most of the good trading candidates are going to have between 3/4 and 1 point of a move on a typical day. I'm sorry, 75 cents to a dollar move on a typical trading day. And if you want to trade the open, which is what I'm doing, then you want to limit it to stocks that trade more than 10 million shares per day. So everybody who's been following, you know, my scalper setups knows, if you've been watching the videos and all that stuff, you know it's pretty much an apple a day, right? It's AAPL. That is my go-to trade right off the opening bell. And let's take a look at an example of that. So here's how I set these up. You see here I've got Apple. And in this case, it's going to be a short. I always bias it towards what the last big move of the previous day was. And in this case, I'm getting in 109.05. My first scalp is 108.84. 108.84 as a second entry, down to 108.60. And then another alternate entry, 108.60 down to 108.27. So where those levels come from, all I'm doing is this. I go through and I'm identifying channels that the stock traded in the previous day. So today I'm setting this up for tomorrow. Every single trade I do, every single trade that we do in the room, pre-planned, right? I don't do anything from the hip. I'm in California, right? I'm trading from Pacific Palisades. It's a beautiful place to live. It's a lousy place to trade because we are up at 6 o'clock in the morning trying to suck down as much coffee as we can to get lucid so that, you know, we can make sense out of this whole thing. Well, the key is you set these up ahead of time, right? I see these ranges. I know exactly what I'm going to do tomorrow. I don't have to sit here and try to figure this out on the fly. Tomorrow comes, those are my moves, right? So right off the opening bell, what I'll do is I watch the pre-market tape and I try to see, okay, where's Apple trading? This super liquid stock. The spreads are going to be a penny even in the pre-market. I see it's trading right around one of those bands. So that's the one that I set up with the bracket order. And I say when the market opens, when the regular session, I only trade the cash session. When the regular session opens, if it hits this line, get me short and get me out at the next line down. And for me, that first trade tends to be it. I'm done at that point. So I take a big bunch of shares on Apple right off the opening bell. I scalp out that profit, and then I'm finished. So I get in here, and I'm out at the next line. Other guys who trade the scalper stuff are looking for these moves, right? If you watch the videos that I've done on scalper, they're all over Trader Insight. They're all over YouTube. You will see that I talk about this little inverted check mark. What you don't want to do is rest a sell stop right under that line, because if it's coming up, if it's moving up strongly like it is in that picture there, you don't want to be in a position of you've got a resting sell stop right under that line, and then if it blasts up and through, you're in some kind of pain. You want to see it move up, and then once it's above the line, then I put my sell short right at that line. I let it come back down. Again, I'm providing liquidity, right? I'm getting paid to make that trade. I'm getting a liquidity rebate. And as it moves down through there, then I've got the opportunity to profit on the way back down to the next line. The intraday charts are all 5-minute charts. That's a good question. So if you're looking at anything that I do, I always plan my trades based on a daily chart. I plan my targets from a daily chart, and then I plan the stops from an intraday 5-minute chart, and I trade from an intraday 5-minute chart. So I'm always doing the same thing. I'm always bumping up one time frame to do targets on my big picture trades, and then I'm always looking at the time frame I'm actually going to trade in to plan out my stops. But really, that's a whole other webinar. But here's the long side. Again, Apple, right, 109.25, and then we see I've got levels all the way up to 109.98. And here's what this one looked like. Right, so right off that opening bell, you see we had an entry opportunity, right? Very first bar of the day traded below that second line that we had on that trading plan. I'm watching the tape. I'm looking at where price is acting before the market opens, and I'm using that to say, all right, it looks like we're trading just below that line. I'm interested in a violation of that line, and I'm going to get a move up to the next line. I'm going to miss a bunch of lines here, right? That's okay. That's all right. That's not what it's about. It's not about getting as much as you can. If you see it plowing higher like that, if you're using Realtick, you can do a convert to trailing stop order. So at the point that it hits that next line, you can tell it, okay, convert it to a trailing stop that trails at a penny. A lot of other software won't do that, so I'm not going to get into the mechanics of how you lock in a bigger trade. But if you're a Realtick user, go ahead and shoot me an email, and we're going to do another webinar. We'll do a thing on Trader Insight just on how to use some of the tools that we use just to get everybody up to speed. But you can plan these for all sorts of stocks. We do them in Alibaba. Again, very, very liquid stuff is what you're looking for. Alibaba's been a good one. When it travels, when it's making big range moves, it makes for some very solid trades. When it starts going sideways, it's not so great. But here we see again, right, real clean entry opportunity right off the opening bell. You're in, you're out, and then look what happens. I mean, it goes and travels in the other direction. So, really, I'm not interested in any of these scalps during the trading day. A lot of you guys are. A lot of you guys are following them all day long. Comcast is another frequent flyer for us, right? Same thing. Let's just go back there for a second. Same thing. We had the level defined on the trading plan. We're up. We're through. And then, I'm missing that move up through the blue pivot. But again, I don't care. I'm just looking to capture, the meat of the move, essentially, the meat of that first move into that range. And if it keeps going, that's not going to be something that I participate in. Let me just show you real quickly before we talk about hold on. Let me tell you about the offer real quick. So we got a special. We never do any kind of low dollar offers for any of this stuff, but we've had a lot of people who are interested and a lot of people who are sticking. So I think it's probably worth trying it. $7 for 14 days of access to my trading plan. So that's the core trading plan. That's the big boy. That's the one that does all of the New York Stock Exchange listed stocks. That did 96 straight months of profits, 96 months without a loss, and then unfortunately the streak came to an end, and we did have a month where we were down, but not significantly, and we're still plowing right along. It's a very conservative trading plan, entry, stop, target, bunch of money management rules. So that's really a plan where when you're getting involved with it, you're going to be immersed, and you are going to learn how to trade the way that a floor trader trades, essentially. And then we're also including 14 days of access to the first hour trading plan, that scalper plan that I just showed you, and 14 days access to a market training video series that I've done, which just gets you basic understanding of the markets, understanding of software, understanding of how to place orders, how to structure orders, and 14 days of access to the live first hour trading pit, which is why I agreed that we would do this for $7, because once you're there, you're gonna love it. So that you can find at traderinsight.com/trading pub, and I would encourage you to take us up on it. It is it's an offer you're not going to see very often, because we're really not looking to grind as many people into a service as we can. We're looking to get people who are, like-minded and interested in trading the same way that we do. But we've had very good success with people who came in. And now, if I can figure out how to I guess I don't know Omnovia as well as I thought I did, because I need to share my desktop. Here we go. I just want to show you the trades from this morning so that you can see these things sort of in the context of how they played out. All right, here we go. So here is a setup. This is the Bed Bath & Beyond opening gap trade this morning. This was the only one that gave us a gap. So again, right, you've got this move, right, down off the open. So you got a move that takes you from yesterday close to standard deviation gap open, right? There's your opening price. Here is the deepest low in the move, right? This bar violates this high and gets you in. And in this case, you've got a very logical place then to put your stop. Your stop is down below this low, right, at $73.68. You got a very tight stop on this. It's going to get you below the low of the bar that's getting you in. It gets you below this low, right? So you see there's support and resistance there, and you target $75. Now you could target the $75.39 move. The safest target always going to be the open or the high of the first bar. And then, yeah, if you got lucky, you got, all the way up here. But look, we got taken out of this trade right at $75, and that next bar came and really hammered around, because trying to get up through that open, a lot of stuff happened at that open, right? That open was where the specialists thought, or where the market makers are pricing this thing around the opening bell. So there's a lot of activity there. You see it in this opening volume. So that's going to be a significant hurdle to overcome on these trades. Easiest thing to do is place your target right there. And I mean, look what happened, right? $1.09 a share on Bed Bath & Beyond. So that's your opening gap trade. And then I've got time yet, I think, to just show you this real quick. Okay, so here's Apple. This was from today's scalper trading plan. It opened above the 125.71 line, right? And that's what I was looking at pre-market. So pre-market, you're looking at the ticker, you're looking at the order flow, you see you're trading right around 125.80. At that point, I don't know it's going to go all the way up to 126.30. All I see is, all right, 125.80 is where the stock's indicated. That's probably where it's going to open. You just pop that bracket order out there because it was a short sale for today. The trading plan was set up on the short side, moves down through 125.71, straight to 125.51. You're out, right? And if you're trading these the way that I'm trading them, you just made $200 for the effort. So it's a very, very consistent and very, very profitable kind of a strategy. I really enjoy trading that. So the scalper stuff's been great. We do these live. We're in there trading with our own money. You see us trading with our own money. You've got no pressure from anybody in that room to do any kind of giant share size. Everybody, it's a community. It's a group of really great guys. Most of them have been to the boot camp. But I'm going to say we've got everyday new people in there who are managing to learn from the guys who have been profiting from this stuff. So I'm really proud of what's going on in the room. I'm really happy that Rick and Ken, and I mean these are guys who went through the training and are in there running that room essentially for free because they just love doing this stuff. They love trading. So now I think I made it. I think I made it time-wise. If anybody's got questions yet, I think we started a couple minutes late. I would be happy to answer questions. And if we don't get a chance to answer them here, then what you can do, is just shoot me an email. So does Metastock? Yeah, the Metastock plugin you're talking about is I'm going to go through and scan for all the patterns in one of my books. The book is Around the Horn: A Trader's Guide to Consistently Scoring in the Markets. The Metastock scanner was built to go and scan for all of those patterns. Oh, that's fantastic! I didn't know I had time left. I thought I had about 45 minutes total here today. So I would be happy to answer a bunch of questions. Anything about trading is fair game with me. So I mean, like I said, I've been doing this so long. We've done it all. We've done everything. So my email is adrian@traderinsight.com. So there, my beautiful trading partner popped that in there for you guys. So Julie and I have been doing this for a long time, like I said, and this is probably our favorite set of strategies is this first hour stuff. So let me just take a look back here through these questions. Do I trade with Elliott Wave? I don't really, I don't do anything really indicator based in my trading. So what I like when I'm working is to just be able to look at a chart and sort of gauge the order flow. So I'm for all intents and purposes, I'm like a floor trader, right? That's the training that I had early on was looking at order flow, looking at where the volume weighted average price is, and then you can start figuring out what the specialist is going to do. I'm sorry, we don't call them specialists anymore, right? You can pretty much figure out what the market maker on the floor of the NYSE is going to do. I'm very, very much in tune with the way that they trade. And if you look at the regular portion of my trading plan, that's all geared for that. I mean, it's, price is going to gravitate to certain areas, and we're just looking to be part of that order flow. We're looking to hop on board the institutional activity that we see today when it continues tomorrow. That's really what that's all about. So I don't try to plot too much in terms of even moving averages or anything. I just go through and price, volume, and time are the factors that I'm looking at. Do I look at volume? Do I look at levels? So I'll look at over the course of the day. So what we used to do when we started, what we would do is we would read the tape. So we would look at the ticker tape, and Julie and I would try to find big block orders that were unfilled, and then we would wait for price to move back towards that block order, and then we would get in front of it, right? So that we would get picked up when there was a big sweep in the market. Then, in the 90s, we started the level 2 trading. That was all, that there's a lot of paint in the tape that goes on in there. So you take that for what it's worth. What I do look at very frequently is the NYSE Open Book. So the Open Book, if you spend any kind of time down on the floor of the exchange, what would amaze you is the fact that the NYSE Open Book, which is essentially like a level 2 screen, actually represents what's going on the specialist order book. So you see what he sees, and it's not, there's no monkey business going on, let's say, right? I mean, you've got a very real representation of what's happening there. It's not going to show you, things that are happening on the alternative display facility, the ADFs, or the dark pools or that kind of a thing, but it shows you what's happening on the floor. So I do use that. And other than that, yeah, I'm just looking at, I'm just looking at price levels. I'm looking at support and resistance. Support and resistance really tell you where the bodies are buried, where things are likely to happen in the future. Things happened there in the past, and it's best, in my opinion, when you're doing short-term trades like this, not to try and get in front of it and say, oh, I think it's going to break through this resistance and then it's going to take off and I'm going to make, I'm going to get rich here. Best thing to look at is say, look, the last 10 times it's hit this resistance line, here's what it did. And I'm not looking to outsmart anybody. I'm just looking to get on board for what I've already seen happen a bunch of times. What's the trading room cost after the trial? It's actually pretty inexpensive. I think, I'm not sure, Julie can correct me here. I don't actually handle any of that kind of stuff. I think it's $99 a month for the trading room, and there's a pretty interesting guarantee around that. So if you don't see them making $100 a day in there, your next month's free. And when I say see them making, I'm saying they're calling those trades and they're telling you what they're about to do. So there's plenty of time for everybody to get on board and profit along with Rick and Ken and Mark and all the guys who are in there monitoring these trades. So what's really cool about it is we've got a bunch of guys who are very, very active in monitoring the trades and making sure that everybody has the opportunity to get in front of them. Bar charts seem old school. Why not use candlesticks? Well, you can talk to my wife because she likes the candlesticks too, and I just like bar charts. So it's a matter of, so Julie and I are both, as you heard, we've received our training in psychology, right? We're both psychologists. And, we're not the therapy kind of psychologists, but we had enough of that stuff that we know what it's about. And the way you see things is very much going to determine how successful you are in doing something. And for me, when I look at a bar chart, I've got a very simple representation of the data that makes a whole lot of sense to me. Like I can almost see money moving through the markets when I look at a bar chart. Julie will, if she sits down at my trade station, at my trading terminal and wants to look at something, boom, she will switch to candlesticks. Real tickets, just Control S, boom, she's into a candlestick because she sees it in candles. It doesn't really matter what you see it in. The important thing is that you see it, right? So whatever it is that represents data to you in a way that you can make sense out of, that's what you should be focusing on. I know guys who are trading 3-line break charts, who are trading, all sorts of esoteric charting patterns, and they see things there that I don't see, and they see things there that they say they don't see in candlesticks or in bar charts. It's all about you, and it's all about you've got to get in line with your own psychology and make sure that what you're trading makes sense in terms of how you see the markets. Yeah, can I sign up with Julie? Yeah, you're probably better off a lot of days. Let me see here. Oh, the NYSE order book. So you can get NYSE. You can get that data directly from the exchange. It's actually not that expensive. It used to be very expensive. Now it is. It's on par with just whatever level 2 data costs. It depends on your broker-dealer. It depends on the software you're using. If you're using Realtek, it's integrated right into the Realtek platform. IB also has, Interactive Brokers has the ability to plot that data right in their order book. TradeStation does not. You would have to use the NYSE's feed directly. You can get that from NYSE. But, if you want to just shoot me an email, I'll get you a bunch of research. Tell me, shoot me an email and tell me what broker you're using, and then I can answer that question intelligently for you if you guys are interested in it. Do I use Methods by Alexander Elder? Yeah, I know who he is. And I've been, you guys who go to Traders Expos and stuff, that I've been sort of the Traders Expo girl since 1999, right? I speak at all those things, so I know all these guys. His stuff's interesting. Tends to be the case that you go in your own direction and you find something that works for you, and what winds up happening is then at first you read everything. I can tell you, I was on my honeymoon, and Julie was looking at me like you brought a stack of trading books to Paris. Does this really have to happen? So back then I couldn't get enough of everything that I could get my hands on, right? Every single thing I could get my hands on, I read. And then you distill from all those things something that works for you, and you figure out, all right, this is, you know, this is the, this is the direction that I think is comfortable for me. This is the direction that I want to go. So for me, the important thing was planning everything ahead of time, because like I said, I'm not very good first thing in the morning. I'm not really good at a bunch of discretionary stuff. And, my trading developed into something that wound up being profitable for me. So my trading plan is super, super easy for me to follow. If I look at it, I say, look, there's only 3 rules. There's only 3 hurdles that have to be overcome on these actively managed trades that I do. And for me, it's super simple. But for some people, they're like, 50% of the distance, I got to move the stop to break even, and then 10 cents of the target, I've got to move it to 50%. And, I don't want to deal with it. I just want a very simple, I'm in, I'm out, or I'm out for a loss. And that's fine. We've got portions. So there's a portion of my core trading plan that's like that. It's just called stocks to watch. And I just bracket those orders up, and if they hit, they hit, and I go and take a look at them at the end of the day and see how they did. But it's all based on what I'm comfortable with. So again, my email is adrian@traderinsight.com. For the psychology stuff, I would say one of the things, and I do eat organic foods, so there you have it. I'm a whole foods kind of guy. For psychological stuff, I'm going to tell you a lot of things that are good for you. So trading is a lot like athletics. Trading is a lot like being a musician. Trading is a lot like being a performer, right? So it's all about getting your head in the right place. So anything that is like a coaching kind of a book, Mark Douglas's book, of course, is really good on this kind of a subject. But any book that coaches you to perform in a situation that's very, very high stress or requires a lot of discipline, and in an environment that doesn't necessarily nurture discipline, is going to be a good thing for you to look at. Best thing that I can tell you, so from my standpoint, what you need to be able to do most effectively as a trader is you've got to be able to right. That first book I wrote was all around a baseball analogy, and the reason for it was every time you step up to the plate has to be like the first time you step up to the plate. There's no thinking about how much money you made yesterday because you're going to get reckless. There's no thinking about how much money you lost yesterday because you're going to be afraid to pull the trigger. There's no good days, no bad days, just days, right? That's what you're looking at. You're just looking at, here's today. I'm going to get in front of this thing. Every opportunity is a new opportunity. I've got my plan trade. I've got everything set up ahead of time. I know exactly what I'm going to do. I plan the trade. I'm going to go trade the plan. And at the end of the day, the best thing you can take away from something like Douglas's book probably is Americans are taught to value the wrong thing, or to determine success and failure in the wrong way. I think it was Douglas who was talking about this, and that's, if you make money, that's a win, and winning is good. And if you lose money, that's a loss, and losing is bad. And that's sort of how you measure your worth then as a human being, is to go and say, well, it's I'm a winner or I'm a loser. And for us, when we turned the corner and really were able to move with this trading business and sleep at night, was when we said, you know what, a successful day is a day where we followed the plan to the letter. We did exactly what the plan said to do. If the plan lost money, we lost money. If the plan made money, we made money. And any kind of a deviation from that is something then that causes us stress. So if we made money on a day where, I would have been down if I would have followed my rules, then, you broke the rules, time to go back to school kind of an approach. You have to be able to have something that is completely, completely disciplined, or else you've got no ability of measuring how you're doing. So, that's my 2 cents on the psychology. But really, yeah, anybody who gets your head in the right place and gets you, gets you thinking in those terms and gets you able to follow your, courage of your convictions kind of a thing, that's going to be what's going to help you the most in terms of the psychology out there. Let me just see if I missed anybody here. No, it looks like I got all the questions. Okay, so now if any of you have any more questions, just pop them in there. I'm just more than happy to answer anything. And then, well, there you go. Yeah, best trading. It's self-analysis before chart analysis for sure. You need to figure out, that's the gist of everything that we do. Look, if you if you go and you try this room and you make money with it, it's going to be for one very simple reason. The psychology of my stuff lined up very well with your psychology. If you go and you try this or you try anything else and you don't make money with it and you see that it's a money-making plan, the important thing is you don't get into this, they call it cognitive dissonance, where you have this real conflict about why something didn't work for you. There's no conflict. If something doesn't line up for you, if something is not in tune with the way that you do things, then it's just not going to work for you, and there's no beating yourself up about it. You just have to move on to something else. So some of this stuff now, you're asking about the futures markets, and my stuff does work in the futures markets. So one of my partners, Mark, so he's, we're partners in a fund that we're doing, and he trades this stuff very actively in the futures market. But for me, it's not, futures are a different animal, right, than stocks, especially the New York Stock Exchange-based stocks. So futures markets are going to have a lot more volatility. They're going to move around. They're going to, they have implied leverage in every position that you're taking. And, for me, when I'm trading stocks, I don't even look at the P&L. And when I'm looking at futures, you got 4 contracts on. I mean, every little move is a lot of money. You can do it with a little money, but then when you watch them move and you're going, holy smokes, I've got to dig out of a hole here. And that's just not really well tuned for my psychology. But like I said, we've got partners who do all this stuff. So charting, data recommendations, yeah. I mean, so I use, as I said, I use Realtick. We use TradeStation for some of its, we actually only use that radar screen thing because that gives us the ability to scan for these opening gap setups very easily. You can also do it with Realtick. Realtick is actually a nicer implementation because you could just port it over to Excel. I've just been very lazy about doing that, but you can have Excel take my trading plan, for example. I can put in all the parameters for my trading plan. Here's my entry, here's my target, here's my stop, here's my 50% level, and then you just have some formulas in there that say, okay, if the last price hits 50%, change the stop to break even. If the last price is 10 cents from the profit target, move the stop to the 50% level. So that's what's nice about Realtick. Other thing that's nice about Realtick is it gives you some extremely, extremely accurate market data. The other thing you should look for when you're looking for your data or you're looking for your broker, go to that broker's website and look at that 606 statement. You're not going to see it on futures, right? It's not required. But if you go to your equities broker and you look at that statement, you're going to see what portion of their orders are non-directed. That's going to be very important if you're scalping, right? If you're going to a broker who's like 90% non-directed, that means they're filling you on, they've got a market maker who's filling those orders for them, and he's filling it on his own book, and then he's paying them, we're not going to say a kickback, he's paying them a royalty on the order flow. That's not great. What you want to do is pick a broker dealer who allows you to direct your orders. So in like the case of the opening trades, in the case of those opening gap trades, for example, if they're listed on the NYSE, my order goes straight to the floor of the NYSE. And that is very, very important then in terms of getting a fill. And if you're able to route your order to the NYSE specialist or the NYSE floor, right, that $2 broker is going to be able to get you into the opening print. Whereas if you're routing your order through a non-directed source, you've got a very good chance that you're not going to get filled on the opening print. A lot of times the opening print's the one you want, right? That's where you see those big blocks of shares going off right at your price. And then you're saying, well, I'm still on the order book. Holy cow, I missed it. How did I miss that trade? I saw them go off. Well, that's why, because it's on an order book. It's being matched on their in their order flow, and you will tend to miss some of those trades on the opening bell. So take a look at that. It's a 606, and that is going to get you, definitely an advantage. And a lot of times it's just a matter of, so with TradeStation or something, they're going to show 95% are non-directed orders. You don't want that. But if you go and you select their per share pricing, I think, that gets you then into the ability to have the directed orders. So sometimes it's just a factor of whether or not you're taking their cheapest commission or you're taking their like penny a share commission, and that's going to tell whether or not you're able to benefit from that. No, I don't do any trading through TradeStation. I'm just a creature of habit. So I've been using Realtek as my software for 17 years now, I guess, 16 years. And, there's a variety of brokers you can use. So I would say the direct access brokers, Lightspeed is good. Trading Block Pro is good. Trading Block Pro is a partner that we have with, with our boot camps and stuff. So they rebate the guys who go to the boot camp, the cost of the boot camp, which is fantastic, right? So the boot camp winds up being free through commission rebates. But what I like about Trading Block Pro is they are really geared for dealing with hedge fund guys who are doing HFTs, right? So who are doing very high frequency trading and very fast, like algorithmic trading. So they've got very, very good routes to the exchanges. So they're very fast, and lightning fast is very important with some of the stuff that that I'm interested in doing. But I'm not really in the business of telling people what to use or not to use. I just really like Realtek because it's very very nuts and bolts, very, very fast. It's got a very good macro language, so you can program up your trades. You saw there when I was showing you the bracket order, I could save my bracket and just have that thing pound out those brackets all day long if I want. TradeStation's nice because you can nest orders. Obviously, you can do a lot of programming in TradeStation. It's just a lot of those bells and whistles aren't things that I was ever taking advantage of. I mean, they also did a rebate on the boot camp, so God bless them. It's a very nice program that we did with them for a while. But then I just got to the point of, I'm showing people at the boot camps how to use how I'm using my trading software, and then they would go and they'd be using, they'd use TradeStation because of the rebate, and then they'd say, well, this doesn't look anything like what you taught us, and hence the switch. So we got them in front of a Realtek broker, and hopefully that's going to be, for all you guys who have attended those things, that's the reason for the shift. There's nothing else. It's not it's in no way a condemnation of TradeStation. I just don't trade from it, so it's just easier for me to tell people, I use Realtek. None of those guys are paying me to push their software. So yeah, we don't do a lot of trades every day. So somebody had asked about the number of trades. So I'm going to say on average, in the room, it's probably 3 trades, 4 trades that are called in there. Usually it's one of those opening gap trades, and then 2, maybe 3 of the sub 10 trades. Typically in my own trading business, I'll do 6 or 7 round trip trades a day. So I am not at all a hyperactive trader, right? I'm doing a very, very structured kind of a thing every day. And like I said, a lot of that probably has to do with the fact when I'm in Miami Beach or something, when we get out of here, we travel quite a bit. That's been the benefit of this. We've been, my kid's he's homeschooled, so, yell at us if you want. But, he's been all over the world. He's been to London 6 times. He's been all through Europe. I mean, we just pack up our show, go on the road, and trade from wherever we are. Am I in the room? I am in the room. Yeah. Rick calls the way that we did it is we divided it up. So Rick does those sub $10 stocks. I do those opening gap stocks. Take a little bit more finesse to figure out, what's the good one, what's the best one. Say 4 or 5 stocks gap. I've been looking at them for 20 years, so I can go through and filter those a little bit better than some of the guys who are working the room with us. But really, it's a peer-to-peer community. So what we've got, any of the moderators are guys who have been through my boot camp. And, when we do those boot camps, it's the same kind of a thing. Like, people who went to a previous boot camp are always welcome to come to the next one for free. But the caveat is they've got to talk to the new guys and help the new guys through it, because sometimes that perspective is super, super valuable to have somebody who's, who's done it and who's learning and work through these same issues themselves. It's a huge benefit to have them in the room talking to people. Whereas I get questions from people sometimes. I've been doing this so long, it's just second nature to me. And I'll get questions from people, and they say, an answer was a little esoteric or a little bit over everybody's head. And I say, yeah, you need to talk to Rick or Mark or guys who are a little bit newer to this stuff. When I travel, so we take equipment. We take all our stuff with us. We don't take, obviously, if you've seen pictures of our trading office online or whatever, it's we got 12 monitors in here, and we're really wired for sound, so to speak. But when we're on the road, we do it on. We've got these Alienware laptops. They are these really great gaming laptops, is what they're designed to be. So they've got super fast graphics. They've got very, very fast processors in them. They cost a little bit of money, but they're not more than any other dedicated trading laptop would be. And if you're traveling a lot, then you got an 18-inch screen. I mean, it really, we can take our show on the road. I can trade from a laptop. At the Money Show in October, we could. Send Money Show. Send Aaron West a request over there. I have done just about every show that they do. I'm their. They put me in the worst spots of the day because they know I'm going to get people there, and I do. I get I get 300-400 people in those rooms, and I love doing them. I love just getting out and talking to people, and that's a lot of the travel that we do. So it's fantastic to meet people. And if you guys want to send us an email, we can send you lists of all like the meetups and those kinds of things that we're doing. I love meeting everybody. I love talking to everybody. Anybody who's met me can tell you that's the truth. I will never say no if you offer to buy me a drink. So, all right, you guys, I am running out of time. And I really, really appreciate everybody being here today. And like I said, if you guys have any questions, send me an email. I'm happy to answer it. If I can't answer it quickly in an email, I'll just send you back my cell phone number and you can give me a call. All right, so thank you so much for hosting me.